its impact on both the market and adoption going forward. Fred, welcome to Bitcoin Capital.
Thanks, Jesse. Good to be here.
Good.
So maybe pretty big agenda there.
Yeah, right. Well, we'll try our best. Maybe to start off, we can start, kind of on your background, Fred. And, I'm interested in, what was your experience on Wall Street? What did you do there? What were you trading? And how did that kind of segue into venture capital and then Bitcoin?
Yeah, so I was part of the original kind of quant, the very first quant traders that hit Wall Street. So there was in the 80s, there was this kind of revolution in sort of people bringing math to finance, and you had people like Myron Scholes and Black and Robert Merton, and some very quantitative people, some of which have ended up getting Nobel Prizes, that really hit kind of finance. So finance was completely changed in the 80s, and I was part of the crew that was hired out of, with a math background to go work in that world. So I was one of the sort of fixed income prop traders in 1986 to early 90s, and I traded fixed income arbitrage. So I traded bonds, options, derivatives. I created capital markets instruments, invented things, and and I was basically trading the account of the firm, right? So I wasn't there's really two kinds of, there's flow traders who are taking orders and just making a market and various things, and then there's sort of arbitrage traders who are you just do whatever you can to make money, right? And that's I was one of these guys who was hired based on my math knowledge, and at a period where this was pretty new to Wall Street. I mean, its sense has become pretty commonplace, to have mathematicians. But back in the 80s, there wasn't that many of us around, so it was a different world, right? It was a different, when I was there, bonds were the big thing. Stocks were not the big thing. Stocks were sort of the second-class citizen to bonds, if you can believe that. Indexing was not really an enormously big thing yet. It was more active investing, and sort of passive investing sort of took over, and sort of took over the world. In the decades that after I've been there. But once you're in that world, you never completely leave it. So I have a lot of friends in that world, and I've kept my fingers in there. And so I went on to start companies, and started a lot of companies, sold a lot of companies, invested in a lot of companies. So I've been in for the better part of my life in tech, and investing in tech companies and starting tech companies. And I've had 10 exits, and had $500 million of exits. So I've been pretty successful as a serial entrepreneur. And, like everybody else, I was a little bit late to crypto. I mean, I was actually early, but never took it seriously. I bought my first Bitcoin in 2013, but I had a really tech focus, where I just didn't think it was, it was really, I sort of felt like, this was going to be Bitcoin might be the MySpace to some future Facebook, or, I didn't understand what was so special about this Bitcoin. That it didn't get to me in 2013 when I first discovered it.
Yeah, that's interesting. I find like kind of the institutional people, or people from institutional backgrounds who are first into Bitcoin, you get like the macro guys because they're gold bugs first, right? Yeah. And you make the pitch of hard money, fixed supply, they get that. And then I think a lot of quant guys too, like some of the earliest big money, institutional money into Bitcoin and crypto was guys who are just trading volatility. And they're running like ARB strategies that they were doing in the old world that are more productive in Bitcoin because you have more volatility. So was it the volatility that kind of like caught your attention and we're like, looking at it from a trading perspective? Or
look, I just wasn't convinced that Bitcoin was going to be the winner, right?
Yeah.
It's sort of every single intuition from a tech standpoint is better, faster, cheaper, right? So Bitcoin is not fast. It is not. It doesn't have a very good UI, right? So you get bad UI, slow, and kind of expensive. And you're telling me that thing's going to win? Like, like surely you can make it better, faster, sexier. And so I was attracted to when I really kind of got sort of really interested in crypto. I was attracted to EOS, right? Because EOS was sort of at that point was fast, it was cheap, and I was like, okay, well, this is this is something that and I knew some of the guys behind EOS, right? And actually kind of even sort of when Tether was starting, believe it or not, I kind of knew those guys too, right? And I was sort of like, well, maybe that might be a good idea, right? Something that's like fixed to the dollar, so we don't have this volatility risk, right? So I thought that might be a good idea, but
well, it turns out it was a really good idea.
As it turns out, but you would have never guessed if you actually were looking at it from those days, you would have never guessed, because I can tell you that in 20 Jesus, when was it? 2016? I can't even remember when it really started, but but 2016, it looked like a really bad idea. Like you couldn't get any banks. There's no way to actually hold the money. And I knew Reeve and Brock and Craig Sellers and all these people. Like I knew these guys. And so it just seemed like, okay, this is a vague sort of idea that might work maybe a little bit. That didn't think it was going to kind of have the math, having better earnings than Goldman Sachs. That's kind of like a small shocker to me. But it just tells you how hard it is to predict really where this stuff's going to end up. You think you have an idea, but you really may not have an idea as to where it's going to be.
I had a similar experience. I was at Macquarie here in Taiwan, and I was and I had an opportunity to meet with then the CEO of Bitfinex and Tether. And I took my boss, who was head of equity capital markets for Asia, over there to meet. And I was the Bitcoin guy within Macquarie and kind of pushing it. And JL gave me the card for Tether. I was kind of like, yeah, okay, whatever. I want to talk about Bitfinex and crypto exchanges. Like, this is where the action's at. So I kind of overlooked as well, how big Tether could be, and how, especially, I think that everybody comes to it with their own perspective and their own background. And I think, I'm Canadian living in Taiwan. You're in the US, very mature markets. And people really underestimated, I think, the demand for dollars and then the friction points behind that in emerging markets, which came out to be a huge driver of it.
Right. And sort of the need for a stable coin in exchanges, Well,
that's what paved the way for Binance and for all the explosion of exchanges and wallets and everything.
So and then I really kind of got Bitcoin religion, I think, in 2019. And so, relatively late, to the party, but when I got it, like there was like a bit that flipped in my head, and sort of like, wait a second, I've been looking at this thing for 6 years all wrong. That Bitcoin really is the scarce asset. It really has the network effects. It really is going to be the one that wins. So,
and do you think that switch is flipping for other people now as well? Because kind of the most of the past maybe 5 or 6 years, I think have been a lot of people looking at Bitcoin with that perspective. They're like, well, it's interesting, but there's things that we can tweak, we can make it better. And I think that applies to like the institutional money that's now coming to Bitcoin. It's probably a lot of the entrepreneur types, the venture types in the US. Do you think that switch is flipping with more people now?
I don't. So I think that I think that most of the people buying in have no idea what it is. They don't understand it at all. I think they're buying because it's a momentum play and it's going up. And they've look. I think that the institutional argument, that they understand the 21 million, right? They understand that. That they get that. They understand. Okay, it's finite supply and it's the first and it's the biggest. That's about it. That's kind of it. If you ask them to explain how does it work when I send 1 Bitcoin to somebody else, they'd be like, oh, I have no idea. What does a wallet do? Explain that. No idea. How does the wallet store the Bitcoin? No idea. How does the difficulty adjustment work? No idea. Right. So I just think that there's a very, very bad understanding of what it is, Bitcoin. Most people do not understand what it is. They really have no understanding. And it's not really that much improved since 2017. Like I hate to say it, but like if I ask people, okay, so you're buying Bitcoin, can you explain it to me what it is? And they have no idea. They really don't understand what it is. So
I think you can see that in kind of the coverage. Like you can see there's a lot of big banks now that are doing research on Bitcoin. And if you get a chance to look at any of those, or even if you get a chance to hear the comments from some of the, the titans of finance, guys like, Paul Tudor Jones, he looks at it relative to gold. And I don't think like in any of the reports you see anything about decentralization or censorship resistance or anything about that side of it that's maybe more important in developing markets or places outside the G7. And the focus is almost exclusively on either it's, I guess probably less from a Wall Street perspective. They look at it as an inflation hedge. I think they look at it as, as there's more easy money, then it goes up really fast. Paul Tudor Jones looks at it as like gold, but like the faster horse. So I don't think anyone's covering, kind of the other sides around Bitcoin, the decentralization, the censorship resistance, or anything from that kind of part of the value proposition.
I would agree.
Or payments.
If you're in the United States, these are not things you tend to worry about so much. I think if you're in Korea, right, and you're under martial law yesterday, you might sort of think, wait a second, do I have access to my bank account? Any, the money that I have in there, is it mine still, or is that, whose money is that? So I think we're sort of slowly waking up as a civilization to that idea. I mean, clearly, the Russians invaded Ukraine and froze the ability. If you had rubles and before the invasion and you were thinking about, taking a long extended trip to Turkey, you realize that your rubles are kind of worthless in Turkey, had you bought Bitcoin or Tether, right? Before that event, you could have just gone to Turkey, but had you not prepared, you're going to find you're very, very difficult to go to Turkey. So I think that in general, people don't understand it yet. And which tells me that we are just so incredibly early. We're in the very first inning, I think.
I think so as well. And I think this has obviously been a huge year for Bitcoin. Institutional adoption is something we've talked about for probably 10 years, waiting for the ETFs and, the Novogratz thing about the herd is coming. And it's just every year it was, slightly slower than expected. And this year we had the ETF approval, which is a massive milestone. What do you think are the implications of that looking forward in terms of, number one, the approval, and then number two, it's been by any standards, I think, just a massive success.
Yeah. So what I think is, and this is kind of like, the reason you're talking to me is I kind of was one of the first people to say, wait a second, this ETF is going to be really, really big when it comes out, and I was sort of saying that back in November, about a year ago. And I was like, listen, guys, you don't know me. I'm a Bitcoiner, but I don't really want to be on Twitter necessarily, or, but I will tell you that I'm raising my hand. I happen to know Wall Street. I happen to know the tech, and I happen to tell you that this is going to be the catalyst that's going to make this thing work, right? This ETF is going to be the single biggest thing in the history of Bitcoin as far as institutional adoption. And it's everything up until then. There was pre-ETF and after ETF, in my opinion.
Yeah.
And the reason is very simple. You take any average investor, whether they're an institutional investor or just a client, guy with a Schwab account, doesn't matter, right? You take a normal investor, they are not going to open an account on either Bitfinex or Coinbase. I mean, yeah, some of them will. 98% of them will not, and
sure.
And even a much, much smaller amount are going to write down 12 words on and buy a hardware wallet and transfer a seed phrase to some internet device. That is so far away from what normal people will do. They'll do it for, some fringe people will do it. Obviously, early adopters will do it.
Yeah.
But most people will not do it.
And are they called crypto anarchists?
I mean, look, and it's just sort of I think, you look at most people over 40,
Yeah.
and you worked hard to make whatever you have, right?
Yeah.
And you're now told to basically trust this thing to a bunch of hardware device or two. I mean, it's sort of what? That's a really big ask. So when I saw the ETF, I was like, okay, well, this solves that problem, right? I don't have to transfer it anywhere. It's in my account. It's in my, my standard brokerage account. All I have to do is press one button and buy it. And it's super tax efficient. Great. If it's an institution, I don't have to spend a year studying which custody provider might be better for me, or how am I going to manage a bunch of keys within my company. All I can do is I just buy the ETF. It's so simple. So I realized that this is going to work for the average person. But I also realized, I think that, so I think the pure techies are sort of well, we're perfectly comfortable with our seed phrases and our wallets and our Bitcoin addresses and everything else. So we don't need that. And I was like, well, you may not, but most people do. But I also felt the finance people didn't understand what Bitcoin was. And they just viewed this as well, okay, we got this ETF. We'll do Bitcoin and we'll do Ethereum next, we'll do Solana next, it's
but that didn't go very well.
There's one new ETF every day in general, right?
Yeah.
So I think the ETF guys underestimated how big of an opportunity this was for this year, but also just how big it's going to be for the next 5 years, right? Completely underestimated it. And so that's kind of where I stand on this. I think both parties underestimated. I think the pure crypto people underestimated how big it was, and the finance guys as well.
Yeah. Well, I think a lot of this has to do still with kind of regulatory infrastructure, because there's still people probably underestimate the degree to which mandate restrictions and regulations, actually holding Bitcoin on your balance sheet for, in some jurisdictions, how difficult that can be. And if you wrap it up and securitize it as an ETF, that makes it a lot easier for people. But I also do wonder, is this kind of like, because I think there's kind of a Trojan horse thing that happens with Bitcoin, is that and this happens for individuals as well. You buy Bitcoin, you allocate 5%, 5% becomes 80%. And then you're like, okay, well, I need to figure this out. And then you discover there's other things around that. And I wonder if that will happen with institutionals as well. Because as you mentioned, like if you're someone in, pick a jurisdiction, South Korea, Turkey, and you've, allocated, maybe this doesn't apply to a US ETF, but to a domestic ETF, you have those same kind of concerns, right? You can lose access to it for sure, or something can go wrong. So the decentralization and, having that seed phrase and more control over your own assets, do you think that's something that will develop in time? And maybe also there's a demographic argument here as well, because the people who, maybe you're kind of describing the people over 40 or even older, that they're less willing to figure out the technology. Maybe as the young people, as they get older and they become portfolio managers and they're more familiar with the technology, maybe they'll be more willing to kind of embrace that part of the value proposition.
Right. But the young people don't have the money right now, right? So
yeah, over time though, they will.
I mean, they will for sure. And look, I think, and without the seed phrases, and the Bitcoin doesn't have any value, right? The entire point of Bitcoin is the censorship resistance, and the fact that it can be decentralized, right? So I just feel like to get to the next phase, what we need, which is also to get to the next phase in price, right? Like to get to $1 million of Bitcoin, the only way you're going to get to $1 million of Bitcoin is if you get several $100 billion of new inflows to buy, right? If you do that, you are going to get to $1 million a coin, but you need to get these big inflows. These big inflows will not happen without the ETF, and it's just that simple. So, and that's why I think, that's sort of the ETF's the higher order bit, right? In right now, everything else is interesting. It's but it's not the critical. It's not what's going to move the needle at this point. It's going to be the ETF, I think. And I don't think we've seen anything yet. So for example, I was just chatting just today. I think was it today or yesterday with online with Eric Balchunas of the senior
ETF guy at Bloomberg.
Yeah. So I was like, look, Eric, everybody was saying that the ETF would be like a short surge for the first 2 months, right? And then it flattens, right? And they all had modeled it that. Why? Because every single other ETF did that, right? They all kind of like start, new idea. Okay, we got for first 2 months, we get a big ramp, and then sort of go down. Well, in the last month and a half, we've had the same. We went from roughly 20 billion to we did from 0 to 15 in the first 2 months of this ETF. Then we slowed down in March, April, and then in November, right, early November, we picked right back up, and now we're on this like complete hockey stick trajectory for inflows, right? Nobody predicted that pattern, right? And so I was saying to Eric, I said, like, you guys did not predict it. And, Standard Chartered had actually made this crazy number. They said, we're going to have $50 billion of inflows. And, we've already got over 30. So, like we'll probably end up at 40, this year. So they were almost correct. And that seems such a crazy number, at the time. But I was like, I'm kind of more in their camp. And I think I do think, and they said, well, we got I said, I got the ETH ETF right. And I go, yeah, you did get that right. That, there was, it's really a hard sell trying to explain anything else other than Bitcoin to an institutional investor, I think.
Yeah. So how do you think the ETFs will impact Bitcoin price, like kind of going forward in terms of the cycles? Because historically we've had these 4-year cycles that revolve obviously around the the kind of the mining part of it and the block reward. I think also there's kind of an interesting argument to be made too, that maybe when Satoshi was designing the 4-year cycle, because why did he pick a 4-year cycle? Is it kind of lines up with US balance sheet expansion and these kind of debt cycles, which seems to work on a 4-year cycle.
Well,
but how do you think?
Kind of, but not. I mean, look, there's also like, if you look at some of the liquidity cycles, they tend to be actually a little longer than 4 years. They tend to be 5-year cycles, 60-month cycles, right? So they're roughly the same. It's roughly the same as the presidential cycle, but not really. You know, I think it's coincidental, to be honest. And I think if you actually look at what Satoshi said, he said this is an educated guess, right? That's what he said. It's like, you know, he picked stuff a little bit out of thin air, you know, and I think, you know, we're looking back now that it was so successful, and we're like, he must have just had some kind of this amazing insight, you know, like Harry Seldon in the novel Asimov novels. You know, he predicted the next 500 years of history. You know, but like I think Satoshi was, you know, was an absolute genius to kind of come up with put all the pieces together. But I do think, I mean, it would have worked fine if it was a 3-year halvening cycle or a 5-year. It did
4.5.
It doesn't, you know, it's just, it's sort of just a random number, you know, and I think that's not, it's not, I don't think it was intentional. I don't think, you know.
But do you think the ETF, and we've got more of like, because I think looking back, it was kind of a unique asset because it had, you know, it was like 90% retail participation, right? We had very little institutional participation. We had like, you know, you don't really have the yin and the yang of markets, of like different time horizons, different kind of like investment philosophies, or like, you know, ability to absorb pain. Like Bitcoin goes down 80%. I don't know how many institutionals will just sit there and watch it go down and hold it. But do you think that the ETFs will impact the 4-year cycle, and maybe we'll start to trade a little bit differently and less in line with it?
I think so. I don't think, look, I think there's going to be bull markets and bear markets, right?
Yeah.
But you know, do I believe that 2026 will be a down year? I don't see any real reason to believe that anymore. You know what I mean? I think we had, you know, we had 2014, 2018 and 2022 were all very bad. But do we really think that means 2026 is going to be bad? I think you're reading a little bit into the tea leaves there. You know what I mean? Like, you have 3 data points, and they correspond to this halving cycle, but you know, halving is not that important right now. Certainly if the fact of daily block rewards going from, you know, 450 Bitcoin per day, you know, now to 225, I just don't think that's going to make much of a difference really going forward. You know, I can't really imagine that that's going to be significant. You know, I definitely think, especially when you have like, you know, MicroStrategy buying 50,000 Bitcoin in like a weekend, you know what I mean? Like, you know, that's 100 days worth of supply. You know, like, you know, like, you know, BlackRock's buying, you know, 1,000 Bitcoin or close to 1,000 Bitcoin in a day. You know what I mean? Like, you know, so these we're definitely, I think we're in a different zone where I think, you know, I just don't think mining, it matters if you're a miner. I get it. You know, if you're a miner, you absolutely care about the mining cycle, the halving reward cycle, et cetera. Do I think it's going to dictate the cycles of Bitcoin? No, I kind of don't, right? So I don't think that it's going to make that much of a difference. But, you know, I do think we're going to have big bull markets and bear markets. I definitely think that, why not? You know, I think we probably will have some very deep bear markets and some really big bull markets still to come.
Yeah, I think that kind of makes sense too, as you talk about like the demand side ramping up and the access getting so much bigger, and at the same time the block rewards are getting smaller. So that just you know, the amount of Bitcoin that could be sold by miners on a daily basis, as it gets smaller and as the demand side gets, you know, so much bigger, it should have less of an impact. I think that makes total sense.
Well, look, I mean, you were in gold, right, at one point, Jesse? You followed the gold
not
market?
Professionally, but I mean, I mean, I have gold. I have
well, you know, like in the 2004 when they had the ETF, the GLD.
Yeah.
I mean, you followed it back then. it went from, we went from $400 an ounce to $1,800 an ounce.
Yeah.
In the next 5 years.
Yeah.
So and the inflows kept on going even beyond that.
No, it is the hockey stick of all hockey sticks, that chart. Yeah.
Yeah. And if you remember back then, the world was not particularly worried about inflation, in 2004. I mean, it wasn't like we were all sitting there going, God, debasement of the currency. No, we were, things were pretty stable. We had globalization, prices were down. We were, and meanwhile, but we had sort of discovered this new asset through the ETF. The ETF had really invigorated the asset, right? I do think that this ETF is going to play out in a similar fashion. I think it's going to take 4 or 5 years, really, for the full effects of this ETF to be felt, right? I think, we're just seeing the very first wave, right? If I have an account at Goldman Sachs, I still can't buy the ETF at Goldman Sachs. I mean, come on, like it's ridiculous. Merrill Lynch does not offer it. So to I think maybe if you're over 50 million in assets and Merrill, you can buy it. You know what I mean? But like, my mother has a managed account at Morgan Stanley. They are not. They won't offer it. Like, okay, it's Goldman Sachs, Morgan Stanley, Merrill Lynch, and of course Vanguard, right? Does not offer it, right? So, it's like, let alone institutions, pension funds, retirement funds. There's just so many people who can't buy it, or and even the people who are buying it, they're buying 1%. I mean, sure, there's a few who are buying a little bit more, but it's tiny, right? It is dipping their toe in the water. So the way, one of the way I look at like why I think the opportunity is so big is if let's look at the current market cap of Bitcoin, like the 2 trillion, right? Well, okay, that's, you say that's pretty big. That's not a small number, but how much of that is owned by TradFi right now? Well, pretty much the ETF and MicroStrategy. That's it, right? So the ETFs, it's about you're talking about 1 million coins, right? That's $100 million, right? And then let's say another 500, another 50 billion for MicroStrategy, right? So $150 billion is kind of how much the entire pool that TradFi can own. That's how much their exposure is, and this is a world that is, $150 trillion plus, right? Yeah. So their exposure really, net is 1/10 of 1%. 1/10 of 1%. So the amount, the wall of money that can and will probably come into this asset is it's 10x is still not even going to move the needle. I mean, it could get 10x as big,
it's still
for $1 trillion to come into Bitcoin is not crazy. It's just, we spent $2 trillion on the Biden infrastructure, like Build Back Better or whatever he called it, right? Like, what I'm saying is this is after COVID too. So, $1 trillion in today's economy, in today's financial world, $1 trillion coming into Bitcoin, it's not crazy. And if we and that's going to move the price to $1 million. $1 trillion will move the price above $1 million a coin if that kind of number comes in.
I'll let Samson know. His price target is too conservative. He needs to lift his price target.
I mean, look, here's the thing. The potential is there, but
for sure.
But we're dealing with the inherent conservatism of the traditional finance world, right? So guys like Warren Buffett calling it rat poison squared, the fact that they're saying this again and again and again just shows you how hard it is going to be to really make a material difference.
For sure.
How hard is it going to be to get the Microsoft board to put even 1% of their $100 billion of treasury into Bitcoin? The resistance is intense as well, right? So the opportunity is intense, the resistance intense too.
Yeah. Do you think there's still much stigma on investing in Bitcoin? Because you've seen all of these positive comments from, titans of finance, Larry Fink, Paul Tudor Jones, all of these guys. You've seen the massive success of the ETFs. Like, why won't Goldman Sachs give you access for their investors to the Bitcoin ETF? Is it do they think there's stigma? Do they think there's reputational risk? Or do you think it's just the momentum of the legacy system and they haven't gone around to it and it's still a small asset? They don't think it's important.
Neither. I'll tell you what it is. Very simply. They're a bank.
Yep.
Goldman Sachs, after 2009, became a bank, right?
Yep.
Same with Merrill. Same with all these things. Morgan Stanley's a bank too, right? What that means is they're subject to bank regulation, right? And they are afraid. They would love to get into Bitcoin. I mean, I'm sure they would love to. They see that there's a lot of profit to be made, right? And they aren't worried that some of their clients would lose money in Bitcoin. They don't care. What they are worried about is their regulators, getting upset with them. That's what they're worried about, right? And up until this, up until this administration actually starts taking control, that's a serious risk, right? This choke point 2.0 is absolutely very real, right?
Yeah.
So these firms, were basically told in no uncertain terms, we don't want you promoting Bitcoin or crypto, any other crypto, right? We're putting it all in the same bucket. Do not encourage this stuff. If I were you, we're not. What are we going to do? We're not saying anything, but we just would prefer you didn't do that. Now, if you guys want to do it, you go right ahead. And I think people they get the memo, right?
Yeah, I think so. I think that's a good segue into, kind of the Trump administration and what they're proposing, because it looks like they're willing to be more friendly to Bitcoin and the industry. And what do you think that looks like? Do you think that's an end of choke point 2.0 that removes some of these obstacles for people like Goldman Sachs? Or do you think there's a possibility for a strategic Bitcoin reserve from the US?
Yeah, I mean,
what do you think it looks like?
I'm not completely 100% it's going to happen, bet the ranch.
Yeah.
But I'm cautiously optimistic, right? So I'm a little bit like I'll see it when I believe it. I'll believe it when I see it. But yeah, I do think that they are realizing that what we had over the last four plus years, right? Because it started even before Gary Gensler. But let's say the last 6 years, right? What we've had is just it's just been a crazy policy, and I think if I had to guess what really went wrong, I think it was sort of this. I think there was in the ICO era, right, the 2017 plus era, people are like, this is going a little far. It's going a little crazy. People are going to get hurt. Right. And they did. Sure, they did. Right. But, we had the Elizabeth Warren crew come out and say, wait a second, we got to put some guardrails on this. Right. We can't just have people saying they're going to do this, that, whatever. So how do we put guardrails? Well, we're going to cut this. We're going to make regulation. We're going to make the barriers to entry sufficiently big so there's only going to be 2 or 3 companies that pass all the criteria. So which companies do we think we're really comfortable doing business with? Well, Coinbase, right? They're public. They're about to go public. We can trust them. We don't like them, but we can regulate them. They're in our. Oh, and then this FTX thing that looks really legitimate, right? Plus, they're big funders to our political party, so we'll let them in as well, right? But then everybody else, Binance, Tether, whatever, we're gonna keep there. We don't want them to get too close to anything, right? Everything else, we'll just still if it happens outside the US, that's okay. But we don't want Americans interacting with any of that stuff, right? So I feel like that was their thing. And then when FTX blew up, then they're like, wait a second, they're all bad. we just gotta destroy this entire industry, right? And that at least that way, when we're not going to get caught, promoting any of these scams, so they basically went on a warpath to destroy everybody, right? Ripple, blah blah blah, and then unfortunately they started losing some lawsuits, right? They lost the Ripple lawsuit, right? And then they lost the Grayscale lawsuit, right? So then they kind of realized, and then of course, you had this Chevron decision, right? So, they're declaring certain things, to be taxable. The IRS, well, maybe the IRS doesn't have the jurisdiction to declare that even there is a tax on Bitcoin. Now, why is selling Bitcoin taxable? Even is there a law? Did Congress pass a law? No. You know what I mean? So, so I think we're now at this point of a re-rationalization of everything. Like, okay, Congress actually needs to make some, in the US at least, right? Congress needs to make some rational decisions as to what is okay and what is not okay. And it's got to be a lot more broad than what we currently are living with, and it can't be like, you should be able to have an NFT and not go to jail for selling an NFT. That's it's just so preposterously ridiculous, are some of these things bad for investors? Sure, it doesn't matter. Let's create a different kind of way of disclosing the risk and return. Maybe have some very simple registration form that you come in, you put, here are the people behind the project, here's what the risk and return, the risk, the due diligence risk of the project are. Click, press, done. And we need a new framework. I mean, we can't just have this regulation by enforcement. This is not working at all. It's not protecting people. It's not protecting investors. It's completely getting in the way of everything. So I think there's a lot of stuff to do, a lot of work to do on the legislative front right now. And I think, I sort of think there's a really good chance that over the next 4 years, we get to a much better place. So
the strategic reserve is really kind of like the icing on the cake, isn't it? There's a lot of kind of less exciting kind of operational things that lie below that could really move the needle, like taxation, clearer regulation,
no KYC,
banking. Yeah.
I mean, do we need why do we need KYC? What, I mean, realistically, we're
you mean broadly or for Bitcoin?
For anything, why do we need, why, if I want to take my Bitcoin and sell it for dollars, why should I need to KYC? Who is that helping? It's nobody. It's just that you're putting this barrier in the middle. And first of all, it's easily, if you want to do something really bad, you'll find an easy way around it. But you're putting this roadblock in the middle, not to mention the fact that all these people have personal data that's being stored all over the place now, like passports, driver's license, and all this stuff. So it's a security nightmare, for these KYCs to even store it or require it. It's just a terrible, terrible idea. And there's really no point to it at all. And I think we need to
I think they would say that it's about counterterrorism financing. It's about money laundering. And probably ultimately it's about taxation and seeing how much tax they can get out of people on various products. I think that would be the pushback you'd get probably from regulators. It seems to me like that's like a real long shot to push back on.
I don't think so. I actually think there's a pretty good chance we can get a lot of that stuff done. I mean, a lot of these rules, they weren't there. They weren't there in 2012. They were not there. Okay.
Yeah, I agree. Yeah, the history on this stuff is really interesting. Where did it come from?
So we've added a bunch of enforcement regimes over the last decade, which are bad. They're just bad, right? Like this New York license. It makes no sense. Like they give it out to like 5 companies. Like people can't do business in New York because they can't get this license that takes 2 years to get or 4 years to get. Like so it's not only on the federal level, it's also on the state level. But if we're going to, I think cryptocurrencies in general could be a very, very good thing for our economy, right? Like they could make the economy more productive. They can make they could reduce friction, and we should encourage cryptocurrencies, and the way to encourage cryptocurrencies is not to say you need to get licenses in every state. And by the way, that takes 2.5 years. So Elon Musk, I'm sorry, you're going to have to wait 2 years before you add payments to X. Literally, that's where we are right now, right? Even Elon Musk has got to wait in line. And, Twitter does not have a license in the state of New York to do cryptocurrency or Twitter X,
Yeah.
So I don't know. We're still fairly backwards in many respects, and there's a lot we can do. Now, strategic Bitcoin reserve, I think it's a fantastic idea. I think we're going to get some version of it, right? And it may just be that the Silk Road coins that we have are put in a different bucket.
Yeah.
Maybe that's all we get, right? Or maybe we get something a lot more, right?
Well, it'd be. I mean, you'd like to see them having coins in their strategic reserve that weren't just from seizure. You'd like to see coins that were, either bought or mined. The mining is exciting. Like what Bhutan's doing is, and I'm sure that there's dozens of other Bhutans out there that haven't been public for a variety of reasons. And, they're capital poor and they're resource rich, and they're leveraging their natural resources to mine Bitcoin. There's a ton of Bitcoin mining in the US. It could be an important part for developing energy infrastructure. Like a lot of that stuff could be really beneficial and interesting.
I'm more constructive. So I tend to think, this is what I tend to think is going to happen. I think that we're going to look at this as an opportunity now, and probably something like Senator Loomis's bill is probably going to form the beginning of an omnibus bill. They're going to put a lot of stuff in that bill, right? And it's going to start with, okay, we're going to have a Bitcoin reserve, but we're also going to have no taxes needed for under $2,000 of Bitcoin per year per person. Okay, so if you're sending Bitcoin as payment, you can send a couple $1,000s. You don't have to declare it. There's no, you don't have any audit risk. There's nothing. Like I feel like, and Bitcoin / cryptocurrencies. You know what I mean? Like I feel like we're likely to get several of these things packaged in one, and that's going to roll it out, and who knows what else is going to be in that bill. But I feel like there's we have a good chance right now of them saying, well, I think this, like artificial intelligence, are going to be, these are part of the core technologies for the 21st century. Right? Is AI and crypto. And also we need obviously better energy, and we need to rethink our energy strategy and so on. But I do think we're going to have a bunch of these things that are rolled into a bill, and that bill will define kind of how America potentially could lead in cryptocurrencies for the next decade, not just be behind and everybody going to Dubai all the time for these conferences.
Yeah. And so it strikes me, it's kind of like the ETF, is that the ETF opens it up for institutional investment, like globally. But a sovereign Bitcoin fund or strategic reserve by the US would open it up globally for other countries around the world to do the exact same thing, because, like it or not, everybody looks to the US for regulatory leadership. I'm in Taiwan and I meet with the regulators. The first question is like, what is the US doing? What is Japan doing? They don't want to be first movers. They maybe optimistically, they want to be fast followers, probably not. But, a lot of other regulatory regimes will follow what the US is doing. So it could be inflows like way bigger than the ETF.
Yeah. No, I think once America leads this way, I think everybody's going to sort of realize this is the right move. And by the way, I think it's going to be positive for the US dollar. Like, I think, Trump's made no qualms about saying, look, I'm a pro-dollar person, right?
Yeah.
But I think, if the US is embarking on not a crash course, but something that's measured, a measured course for accumulating Bitcoin, deregulating and all, I think that's really positive for the dollar, versus every other currency, that would be like, I'm an investor. Yeah, I like that. Okay. You're going pro business.
Yeah.
You're buying Bitcoin. You're going to be starting this. Like, I now sort of see a road, maybe not to getting out of debt, but to getting out of like a debt cycle, and, it doesn't get you out of the woods, but maybe in 20 years you do this and maybe you kind of are out of the woods, maybe you're part of the way out, you're back to where you were in 1980, so it seems like this is not anti-strong dollar. I think that, I think the Elizabeth Warren bashing crypto strategy, I don't think served anybody well. And I think I think that was one reason that they lost the election, this kind of stuff, I think.
Yeah, which is interesting as well, right? That you've got this massive political cohort that isn't like really tied to either side, but they've got an important issue.
Yeah. And so, look, I think, all this stuff is like super good for Bitcoin over the next decade, right? So, I mean, I'm really, really bullish on Bitcoin. I sort of walk the walk, I'm majority of my assets are in Bitcoin, and kind of like to where you said, I didn't sort of just decide all of a sudden to put a majority of my assets in Bitcoin, but I didn't also I didn't trim them either, so so that's kind of how things work,
I wonder, I'm bullish as well, and I'm surrounded by uber bulls as well. But I wonder if we're maybe not even bullish enough, because when I used to talk to people, especially like institutional investors, about the investment case for Bitcoin, I wouldn't talk about what I thought was like possible, but kind of out there part of it, like the ideas like hyper Bitcoinization, the ideas of nation state hash wars. But with the strategic reserve and a potentially more accommodative stance from the US, like these things are on the table, which is kind of crazy.
Yeah, well, as you mentioned the power law, right? And as I am a statistician and a mathematician, I'm in that. When I first saw that, I was like, okay, this is the Rosetta Stone, okay? Because you can say whatever you want about what the possibilities are endless and stuff, but this power law really gives you this very, very good statistical roadmap for exactly how fast this adoption's happening. And really it's not that different from the adoption of the internet, the adoption of cell phones, the adoption of TVs in the 50s. It's like, this is just a technology, that is slowly making its way, towards, mass market. That's kind of it. And the power law says exactly how fast it's making it. And, across many different ways of measuring it, right? So you can measure it in terms of Bitcoin price. You can measure it in terms of how many wallets have, 1 million Satoshis, or how many wallets have 1 Bitcoin, and all of these things are very, very close power laws. And, they not just sort of fit a power law. They're like a power law with an R squared of 95 to 97%. It's like these things, you don't get these kind of statistical fits, over 6 orders of magnitude, from Bitcoin 10 cents to Bitcoin 100,000, right? We now have 6 orders of magnitude. Like the latest data is 1 million times the early data. Or if you look at hash rate,
very high level, can you explain the power law? Because I mean, there's been other attempts to model Bitcoin. It's been it's notoriously, I think, tricky to model. Metcalfe's law was one kind of way to model it, which is based on network adoption. Stock to flow was another, which had another, had a high R squared as well, but then kind of broke down later on. Can you explain the power law and why it's?
So first of all, so the best explanation of the power laws it is not a. Well, let's say what it's not. It's not like we're not taking a model like stock to flow, which is based on this concept called, we think scarcity is the reason why Bitcoin is valuable. Okay, therefore, things that are more scarce tend to be more valuable. Okay, Bitcoin becomes sort of mathematically more scarce on each halving, right? Because there's less and less flow coming, for an equivalent amount of stock, right? So the stock to flow number increases when you have a halving, right? Now, if you look at the stock to flow numbers and then regress them on a log basis, you get a correlation. I could go in for like half hour as to why that's sort of incorrect mathematically, but the power law is really just what is the best mathematical model for the growth of the price of Bitcoin over time? Just one dimension, time, right? Well, is it an exponential function of time? No, it is not. If you try to fit an exponential, a constant growth curve, you will find that there's no number that fits that well. So it's not exponential. It clearly isn't. And why is it not exponential? Well, if you try to model an exponential, it'll fit very well in the beginning, but it won't fit so well now because the growth of Bitcoin is slowing down. The growth in price is slowing down, right? So, but if you fit it to a power, which is to say it is time to the power to a constant power, right? Times another constant, you find that the fit's very, very good, right? So, and actually it turns out that power is, around 5.8, right? So, let's just call it to the 6th power, right, of time. So you have to look at it. You have to look at time in a logarithm on a log basis, not on a constant basis. And you have to look at Bitcoin price on a log basis. But if you look at Bitcoin price on a log basis, it is a power law. And what we're just saying there is that is the mathematical best fit. It's a very good fit for the Bitcoin price. If you look at Bitcoin address growth, it's a power law. So these things are power law. If you look at hash rate growth, it's a power law. So all these 3 things it's just a statement that statistically that's what they are. They're power laws. There's no debating that. Like it's just this they happen. You have a 16-year history. They're power laws. The model fits very, very well. You can even go further and further, but there's just no doubt that this is the behavior up till now. Right now, people always say, "Well, but it's going to change next year," and I'm like, "Really? Why?" Well, we have the ETF, we have, we're going to have the reserve fund, we're going to have so and so going. Well, the ETF happened this year, right? We're still completely within the power law, right? Yeah. ETF happened. We're in the power law. We didn't violate any power law by the ETF. Yeah. We've had good things that have happened. We've had bad things that have happened, but statistically, we're very much in the power law. And so, the way I look at this, and I'd say there's very low chance that we're going to be outside of this power law band in the next 10 years. The next 20 years, 30 years, I don't know. We could be into, things could change. There's sort of like it's like looking at the growth of internet adoption, in 1999. It has slowed down because at this point, most people have internet.
Sure, that makes sense.
We don't need to go we're not finding that many people who don't have internet anymore, but we're still in the, very early phases where, 1% of the population at most and worldwide has any kind of significant amount of money in Bitcoin. Most people do. And, you have to be careful how you measure these things because, some people say, well, up to 20% of Americans have some Bitcoin, but sure, they have $10 on Coinbase. That doesn't count.
Yeah.
Right? But, we're still in the kind of 1% kind of range, right? In terms of how many people have Bitcoin. And, it's 1% going to 10%, going to 50%, and all the power law is saying how fast is that growth going? That's just looking like a population growth or a virus growth. And the growth is happening at a certain rate. And that's really ultimately what's determining the price of Bitcoin.
So where do you think is a realistic range for next year? And then maybe slightly longer term, like 5 years?
Well, I can tell you exactly what the power law tells you, right? The power law, so it gives you a much better number for 5 years than for next year. Because if the power law sort of says, well, next year you could be as low as 50,000 or as high as 300,000. That's sort of like so a lot of people say, well, great, that tells me absolutely nothing, right? And you feel like there's a law that says that. I mean, that's nothing. And then I would say, well, okay, yeah, that's true. It's not very predictive for next year, but it's actually very predictive for about 10 years from now, because if the power law tells you very precisely, it says 10 years from now, you're going to be somewhere between 500,000 and 3 million. And now you're like, oh, wait a second. So you're telling me it's absolutely going to get to 500,000. It's like, yeah, that's kind of what the power law says. The very low end of the range is 500,000, right?
Yeah.
And the very high end of the range is about 3 million. So now you're like, well, that's definitely telling me something very, very predictive, right? That's something that, if that's right, then, I probably do not want to sell a Bitcoin. If I'm putting a Bitcoin in my child's retirement account,
yeah,
like and the kid's 7, this is gonna, this thing's gonna be the kid's gonna be pretty good if I give him 1 Bitcoin today, right?
Yeah,
maybe 500,000 will not quite buy half of what it buys today. Who knows, right? But it's not gonna be $500,000 for a cup of coffee either, So, in real terms, Bitcoin is going to go up quite a bit in the next 10 years.
So I think that's interesting, is that people always think that, no matter when you join Bitcoin, you always think that you bought at a high. I think that happens to a lot of people.
Yeah.
And people are looking at Bitcoin coming up to 100,000 now, and they're probably thinking, it's pretty high. It's what's the upside from here? But the investment thesis still sounds the same as it did 5 or 10 years ago, which is like, buy a little bit, enough that'll let you sleep at night. And it's about positioning. You don't want to go too crazy. And then there's a good chance that on a 5 to 10 year basis, it's going to be worth a lot more than it is now.
I would say you kind of want to go crazy. Like, look,
try to be responsible.
I just would sort of say, you don't want to buy a little bit of Bitcoin. You want to buy a lot of Bitcoin, right? And so
it depends on who you are, though, doesn't it? Like if you're in your 40s, 50s, 60s, right?
Well,
versus like a 20-year-old.
Well, unless you plan on dying tomorrow,
yeah.
If you're 60 years old, do you think you're going to make it till 70?
Yeah.
Okay.
I think,
you do?
Hopefully, yeah. Yeah.
Well, if you do, right?
Yeah.
Unless you plan on checking out early on your own, for some reason, but like, if you plan to stick around, I would sort of say you should probably look at a 10-year track record, right?
Yeah.
10-year time frame. I think Bitcoin has a tremendous upside over a 10-year time frame. So I would sort of say, what's the right allocation for Bitcoin? Probably 70%. of your portfolio. That's probably the correct number, right? Like mathematically, that's kind of what I would say. 70% of your portfolio should be in Bitcoin. Now, everybody's gonna be like, whoa, Fred, you can't, that's irresponsible. You're supposed to be 60-40 stocks. And I would say, well, that's just a convention, right? That's kind of like, this current, so sort of like, the church of finance has dictated that that's a reasonable number. But I don't think it is. I think most people would be wise to put the majority of their funds in Bitcoin right now. And I would say keep 30% around, somewhere like 30 to 40% in either cash or liquid something, just for a rainy day, like in case you need to wait a couple of years. But look, nobody's ever lost Bitcoin over a 4-year period. If you've held 4 years, you've always made money. And like you want to be with the fastest horse. So I think everybody's underinvested, completely underinvested. And I would say most people should be heavily into Bitcoin. It's just such a big jump from where they are currently positioned that unfortunately 99% of them will completely miss it. But
and another depressing side about this too is I find like the whole meme coin thing and its various iterations previously, like DeFi and all of these other kind of NFTs and this kind of stuff that's very, very speculative. It appeals to young people. I think that's very depressing because I think it's a comment on like upward mobility and the ability of people to kind of like work hard, save money, and move up the ladder. I think a lot of that investment is done out of desperation and people just wanting to get rich very, very quickly.
It's done out of a bad calculation too. Like honestly, people are like, I can't afford. So I had this comment on Twitter the other day. Somebody's like, well, Fred, here's the thing. Bitcoin is great if you're already rich and you're trying to make money. But if you need to, if you're not rich and you need to make 5 to 10 times your money in a year, you have to go to meme coins. And I'm like, no. No. First of all, if you do that, you're going to lose all your money.
Sure. So, that's typically what happens.
You're going to lose all your money. So that's just a terrible decision. And basically what you're saying is 40% a year is not good enough for you. So you need to go somewhere so you can do 400% or 1,000% per year. And those returns just don't exist, right? So, it's sort of like none of that makes any sense. And I think it's, I think that there's this, people believe it, but I don't think it's accurate. Like they believe, they believe that they look, the way I look at it is you're so lucky to grow it up in this world in which you have this asset that you can save in that has such a strong potential rate of return over the next two or three decades.
You can invest in ahead of most of Wall Street and virtually every economy in the world, every government in the world.
Not even like you have to do it now. You could probably just simply get a job. I had this one tweet that just kind of went completely viral on Twitter. And I said, listen, if I were you, I'd spend all your time and energy trying to figure out how you can get involved in AI. And I put all your money.
I saw Bitcoin.
That. And that's kind of what I think. It's sort of like, you don't need to think about Bitcoin. It's just like your savings account. It applies whether you have $1,000 to save or you have $100 million to save. It doesn't matter, right? It's equally good, right? It doesn't matter. But you shouldn't be overthinking it. You shouldn't be trying to diversify it too much. You just want to get on that train, right? You want to get on this Bitcoin train. Now, probably not a great idea to try to work in Bitcoin or it's not really an occupation, right? And looking at Bitcoin price, is not really an occupation either. Like I do it a lot. I'm on Spaces a lot, but listen, it's a luxury, right? I don't have to work, so I like kind of entertaining people and just getting on Spaces and posting on Twitter, and it's fun. but it's not a job. That is not how you make money. So if you're young, what I would recommend is go get a job. Whatever job you can get a good job, and save some money and use Bitcoin as your savings account. That's what I would recommend, and don't overthink it, and absolutely stay the hell away from these meme coins, because that's just like, that's going to be bad for your financial outcome. In my opinion.
Shocker.
Shocker, but
yeah. Yeah, I think we're kind of coming up on time here, but there's two more topics I wanted to talk to you before before we go. So the first one is MicroStrategy. So it's been on a rip. It's kind of developed this new model that interestingly has been very successful, but very few, if any, other countries have adopted it. So can you maybe talk a little bit? I know you've been following this trade. Can you talk a little bit about what they're doing? And then, why aren't other people doing it yet? It seems he's like, as Adam Back says, he's literally giving classes in how to do this, seminars, and still there's not really much pickup on it.
I mean, look, what he's doing is, he's doing two things. He sees there's a lot of people who may like Bitcoin, who like the ETF, who can't buy Bitcoin, who can't buy the ETF. And those are, everybody in those brokers accounts that I mentioned, Goldman Sachs, Merrill Lynch, whatever, they can't buy Bitcoin, right? But they're also, everybody who's in the country of England, can't buy Bitcoin in their pension funds. They're not allowed, right? If you're in most places in Europe, you can't buy Bitcoin, but you can buy MicroStrategy, right? So you have an asset that is a proxy for Bitcoin, and it just holds a lot of Bitcoin, right? Now, what he's doing technically, he's issuing more shares of his company and buying Bitcoin with them, and the shares are trading at a premium to the amount of Bitcoin that he has. So if he does that, the amount of Bitcoin per share, it's accreting. So it's becoming, there's what he calls a Bitcoin yield. It's getting more there is a Bitcoin per share. So the Bitcoin per share of MicroStrategy shares has gone up 60% this year. So relative to where it was in January. Well, that's really good. If you were a MicroStrategy shareholder on January 1st, you have each share of MicroStrategy has 60% more Bitcoin in it than it did before. You have to be kind of careful, because if you're buying these shares at a 3x multiple of how much Bitcoin they have, which is kind of roughly where they are right now, even if they could continue that for 2 or 3 years, right? You're still gonna not get back to equivalent amount of Bitcoin per share in the in MicroStrategy as there would be if you just bought the underlying. So my view is, look, if you can't buy Bitcoin, I think it's actually a very good idea to buy something, and MicroStrategy is probably your best bet. I would buy MicroStrategy over buying a miner.
Sure.
They have a lot of Bitcoin. The downside's limited. It's run by a great guy who's got your best interest at heart. I think it's good. On the other hand, if you have the option to actually buy Bitcoin and hold it in your own hardware wallet, or buy the ETF, I'm more in favor of that. And if you already own Bitcoin, like you and I, would I sell that Bitcoin, take a tax hit, and then buy MicroStrategy? Not a chance. So, I think a lot of people are buying it because they like the leverage of it. They like Michael Saylor. He's a great guy. He's the spokesman for our industry. So I wish him absolutely the best, and we do not have a better spokesperson at all, in our industry. He's by far the best, and it's not even close, right? So
there is no second best.
There is no second best. So he's great. What will happen with the multiple of MicroStrategy? I think it depends on, in a bear market, I tend to think that this thing is going to collapse, if we go for a 4-year bull market, I think it could do really well by buying MicroStrategy, right? Because you're going to get that yield for 4 years. If this market ends sometime next year, well, then I think you would have done much better by buying Bitcoin.
Yeah. As a fixed income and a bond guy, is part of what makes this successful too, is that it opens it up, like the convertible bonds, the zero coupon bonds, is part of what makes it successful, is it opens up this kind of like Bitcoin volatility. Maybe they don't even care about investing in Bitcoin, but they probably like, the number goes up part.
Well,
it opens up to them.
Well, that's the ARB desk, right? So, there's sort of two things. One is there's these ARB desks that are just arbitraging it, right? They're just basically taking that option that's embedded in the convert, then basically stripping it out, right, and then just trading it, right? That's one side. But then there is another side that's starting to appear, is they've sold a number of these bonds to this German insurance company, Allianz.
Okay. Yeah.
So that's separate, right? And that really is interesting, because that's like, okay, here's an entity that presumably couldn't buy Bitcoin at all, probably for whatever reason can't buy the ETF, but they like the idea of the downside protection of the convertible bond, and they'll take a flyer on it, So, this thing could be a significant market. There's, that could be a significant, I think. So I'm excited about it. And there could be more financial engineering. And look, that's just what Michael Saylor and his team have done this year. I expect there's going to be more financial engineering next year. There could be, I was talking to some option traders, and a lot of them seem to think that he might actually issue warrants, long dated warrants, and just take the money from the warrants and buy Bitcoin, So just issue these warrants directly, So there's a lot he could do, and there's a lot of structured bond kind of ideas and stuff that he could potentially do. Wall Street is incredibly clever. There's a lot of very, very clever, and you came from Macquarie, so there's a lot of smart people end up on Wall Street, Wall Street in a general sense, right? Fintech. So there's a lot of people who are really good at coming up with new instruments and new ways to structure things. And I like that side. I think this is kind of a gateway, right, to some of these guys. Really, there's so much money out there, which it just needs to find a way in, right? And I think, he's providing a lot of that with these products. So I'm super, super excited about it. I don't want to speak badly or anything of like this MNAV or something. It's obviously Bitcoin itself is super volatile, and then you layer on all these other things, it becomes even volatility squared. So, I mean, you could lose a lot of money with it, but so you have to be careful. I would be always. I would be a little less gung ho with all your money in MSTR versus all your 50% of your money in Bitcoin. I honestly, I would tell anybody to put 10% of their money into Bitcoin right now. I think you're kind of nuts if you don't. Sort of like if you don't, what are you doing with the other 90%? Like putting it in government bonds? Like what are you doing?
I think those questions are going to be asked more going forward. Like fund investors, and they're going to ask people, why is your allocation to Bitcoin 0? That doesn't seem like the right number, right? So I think those questions will be asked more, and will push people more into it. It's because it's a good question, right? Like if you look at the performance this year, if you look at the ETFs, like what's your excuse now? Why are you under allocated?
Look, this is likely to change a lot over the next 5 years. It's going to change a lot. And if Bitcoin does what I think it's going to do, it will force a major reassessment of all portfolio allocation, and this entire model is going to it will, all your models are broken is kind of, it's kind of true. I mean, I think people are going to realize, you don't have to be completely crazy Bitcoiner like you or me, but I do. I think we're gonna end up doing great, but but I think that I think the average person's, I think things are going to change, and I do think, and I do, and just to say my last thing is I do think we are going to go to a hyper Bitcoinized world, right? So I think it's inevitable. I think 20 years from now, we're going to have a world currency, which will be Bitcoin. I do think that will be the case. I think I think Tether is super interesting as far as getting us there, right? But I think that ultimately even Tether will not be needed, right? Because ultimately, I think we're going to go to Bitcoin. I think Bitcoin will be the core unit of account of this planet. I think we're going to that world in which we have a common currency worldwide, and even if we are threatening nuclear annihilation, I saw Putin today on TV saying you can't stop Bitcoin. I was like, the guy's right. He's threatening Europe with nukes, but at the same time, both Europe and him can use Bitcoin. So like that's the ultimate test of you don't trust, right?
Yeah, I mean that's one of the best things about Bitcoin is I think it's an optimistic view of the future. Without Bitcoin, I think there's a lot of things you could be quite worried and depressed about, but Bitcoin offers, I think, quite an optimistic look at how things could go. Yeah,
I think it is, and I think it's you kind of it's easy to kind of feel like you're on a listen, I just want to say that I for me it's like I feel like the apostle in early Christianity. I kind of want to spread the word. I'm like Sailor is the same, but like he's better than me, but like I like to spread the word and try to convert as many people as I can, especially people who are close to me. I'm really big into orange pilling them, because I think this is what we can get back. I've gotten a lot out of this, this asset. It's been very, very kind to me, and I'm betting my future on it. So I think, I mean, I think it's gonna have a great future. So.
That's great. Yeah. Well, I want to be respectful of your time, but to wrap things up, can you maybe tell us a little bit about your book, the Big Bitcoin book, and then we'll finish on that.
So here it is. This is my Big Bitcoin book.
That is big.
It's what we did is we wrote this. It's a very different kind of a book. We decided to write sort of the first art book on Bitcoin, right? And it's including people like Larry Fink and. Some of it is just words, Yeah. It's a coffee table, very high production value book. And I really wanted to have almost a book that you don't read, but you just open it up wherever and you're like, oh, okay, this is 2013. Oh yeah, that's the crash of 2018. I want to read about that, or lightning or whatever. So, basically we wanted to create a, like a Toshin style, really high thing. I mean, initially we were like, will we be even able to? We're definitely going to lose money on this thing, And then and we've sold already $350,000 in 6 months of this book.
Oh, nice. Oh, so it's out there now. We can get it and send it to people.
Yeah. So it's on. We have a web. It's not on out there really. We have a website called bigbitcoinbook.com.
Okay.
We're selling it there, and it's it's a labor of love. And so, and part of the other reason why we did it, and you know what, I'd be very thankful for you if you could figure out the 2 or 3 people that I need to get to at Tether. I'll happily get them a copy,
Okay, for sure.
Whoever it is, Giancarlo or Paolo or whoever, right?
Yeah.
But if I can get an address where I can send these books, would be great. And I'll send you a bunch of them because we have a bunch.
Oh, great.
And what I've done is we've sent them to a whole bunch of people. And part of the thing is, like I gave Michael Saylor 5 of them. I gave Senator Loomis one. She's like, oh, thank you. I gave Bill Miller one, you know,
nice.
and he's like, hey, I guess, thank you so much. I want to buy another one for my dad. So like for Christmas, you know, so like, you know, we wanted to give this thing so that, you know, these people who have they have more influence than time, you know, so that they can like, hey, I'm going to show you this, you know, it's really, we thought this would be a very good way for them to orange pill. So basically every politician that's pro Bitcoin, we gave them one, like Ted Cruz, whatever, you know.
Yeah.
So that basically that's kind of what we did. So it was a great thing. You can go to bigbitcoinbook.com.
Oh, that's very cool. I
yeah,
like that.
and then we did, yeah. So that's kind of what we're doing there, and yeah,
good stuff.
Yeah.
All right, well, Fred, thank you very much for your time. I really appreciate it.
I really appreciated it. Thanks a lot, and